Waiting for rates unchanged. EJ Antoni is here, senior fellow at Unleash Prosperity, and Tommy Aiello is senior director of government affairs at the National Taxpayers Union. Welcome to you both, and thanks for coming on. All right, Tommy, start us off here. Thoughts on the Fed keeping the rates the same? I mean, again, probably not a big surprise here.
Yeah, certainly not a big surprise. I do think that the Fed could have cut rates by about 25 basis points. I think they're operating under the assumption that inflation is going to remain elevated, but that's not what the data shows. So if you were to cut interest rates by 25 basis points, we're not going to have that same level of inflation that we had 3 years ago. It's just not going to come rolling back. So I know they're looking at the wide picture. It's, inflation is one piece of the puzzle. The GDP report is one piece of the puzzle. But I do think that hopefully we're on a path to cut rates in the second half of the year.
Yeah, EJ, that's the big question. You've got the GDP second quarter coming in hot at 3%, higher than economists anticipated. You've got interest rates hovering above the 2% mark. You've got record highs within the stock market. What is the Fed looking for? Because if you read into the actions taken by, or lack of action taken by, the Fed chair, there was rare dissent among those in the Federal Reserve with this decision. EJ, your thoughts?
Well, if you'll permit me to be cynical, I would say what the Fed chair is looking for in terms of data is for the president to have a D after his name instead of an R. But if we want to just try to stick to pure economics here and pure theory and modeling that the Fed says they use, then I think the Fed has a lot of excuses they can point to for not cutting rates this year. Now, to be clear, I'm not saying this is what they should do. I'm just saying that these are the things that they will point to say this is why we can't cut rates. They'll point to a relatively strong labor market and say there's no need to cut rates because the labor market is strong. They'll point to inflation rates above the 2.0% target and say inflation is running too hot. They will also say they will also say things like tariffs may cause future inflation, so we want to keep our powder dry in case that happens. They will point to deregulatory efforts and say that could cause an even stronger labor market. So again, we want to keep our powder dry. And I just want to reiterate, these are not things that I think are good theories or good practice for the Fed. I'm just saying these are the things that the Fed is pointing at and will continue to point at as their rationale for not cutting rates this year.
Yeah. Tommy, as I was listening to EJ there seemed to be one thing that was missing, one sector, and that being the housing market. Home prices are so high these days, and the rates being high also makes it very difficult for those first-time home buyers. Can you speak to that?
Yeah, housing, rent, mortgages, that's one of the largest portions of an American family's budget. So if you were to cut rates, you would be giving essentially a significant cut if you wanted to refinance your mortgage or procure a mortgage, or even if you are a builder and developer, you still need interest rates if you want to finance loans to build. So all of that would be priced into the cost of housing. And I think if you're an investor at this point, your baseline needs to be that there's going to be no rate cuts for the rest of the year. And I think EJ has a point that the economy is running pretty hot. And I think we can expect GDP to remain strong through the end of the year with more certainty from trade deals, even though we're still going to have elevated tariff levels compared to this time last year. Certainty is good for the market. Plus, you're going to have portions of the One Big Beautiful Bill really ramp up into the end of the year, particularly on the business side with full expensing and other cost recovery provisions. So I do think the economy is going to remain strong. We've seen prices level off a bit, and it's actually had a big drop over Q1 of this year. So hopefully that remains the trend as well.
All right. We appreciate the time of EJ Antoni and Tommy Aiello. Thank you very much.
Thank you.
Thank you.